Good morning. Come to question number 4. ABC Limited is considering a proposal to acquire a machine costing rupees 1,10,000, payable rupees 10,000 down, and balance payable in 10 annual equal installment at the end of each year, inclusive of interest chargeable at 15%. Inclusive of interest chargeable at 15%. What does that mean? Installment includes interest. Another option before it is to acquire the asset on a lease rental of rupees 15,000 per annum, payable at the end of each year. Payable at the end of each year for 10 years. The following information is also available. Terminal scrap value of rupees 20,000 is realizable if the asset is purchased. Scrap value 20,000 after 10 years. Company provides 10% depreciation on straight line method on original cost. So 10% on original cost. So how much depreciation you will take in your calculation? 10% of cost of asset. 1,10,000. So how much is depreciation? Is it right? So depreciation will be 11,000 rupees, which means after 10 years the book value of the asset will become 0, which means the scrap value will become fully taxable. 20,000 rupees will become the profit. Is it right? If book value is 0, sale value is 20,000, entire 20,000 is the profit. Next line, tax rate is 50%. You are required to advise as to which option is better. Same like question number 3. First we will write option 1. What is option 1? Purchase the machine. Purchase the machine by borrowing by borrowing. How much amount you have to borrow? 1 lakh, not 1,10,000. Because 10,000 will be the down payment. Okay. So under that you write step 1 is loan installment. Loan installment is equal to loan amount upon PV annuity factor. What is the interest rate? 15%. Time. And what is the date of payment of loan installment? At the end of the year. So annuity factor take. Loan amount will be 1,10,000 minus 10,000. Down payment deduct. And what is this present value annuity factor? Anybody? Present value annuity factor? 5.0187. 5.0187. So what is the annuity factor? Installment amount? 19,000 round off? 19,925. Round off the last digit. Then step 2 write down discount rate to be used for evaluation. Discount rate to be used for evaluation. is equal to after tax cost of borrowing. Discount rate is not given in the problem. Discount rate is not given, so we will take our discount rate, which is 15 into 1 minus 0.50, that is equal to 7.5%. Then write down step 3. What is step 3? Tax shield on interest. Tax shield on interest. Interest is already included in the installment. Yes, yes. But on interest, you'll get tax shield. So for that, you prepare the same format year. In one question number 3, you have done this. Loan outstanding. Loan outstanding. Interest at the rate of 15%. Installment payment. Tax shield on interest at the rate of, what is the tax shield rate? 50%? Is it 50%? Start year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What is the loan amount? 1 lakh? I'll give you one line only, then remaining you have to complete. Those who want to copy will wait. Interest is how much? 15,000. And installment is this number, 19925. 19925. This you write 10 times. Be little fast, okay? In the exam, these are 8-10 marks question. But you have to write fast. Okay. So first year tax shield will be 15,000 into 50%. 7,500 tax shield you will get. Is it right? Then important thing, how do you get the next year balance? One I will write, 1 lakh rupees was opening loan on which interest accrued 15,000, add, and installment paid 19,925. So how much is the opening balance here? 95075. 95075. Yes or no? Yes or no? Interest next year, interest 14,000 261 14261 into 50%. 7130 or 31? No problem. Now you take the charge. Complete the table first, then I will talk to you later. Those who want to copy will wait. And will wait only, because I am not going to write. over. Can we check? See give me the last column only. If that is right, it means you are right. Third year, 6706. Fourth year, 6218 plus minus 1. Next fifth year, 5657. 5656. Okay. Next, 500 5010. Okay, next, 4267. Okay, next, 3412. Next, 24. Okay, next, 129 1298. Right, 1298. Now, step 4, write down calculation of present value of cash flows under purchase option. Calculation of present value of cash flow under purchase option. So write down year, particulars, cash flows, discounting factor at the rate of 7.5%, present value. In year 0, write cost of machine. Is it 1,10,000? Year 0. Borrowing 1 lakh, positive. So automatically 10,000 rupees net outflow is down payment. No need to write 10,000 again. 1-10. Loan installment, which we have computed in bracket step 1. 19,925 and 1-10, you write tax shield on depreciation. Tax shield on depreciation, the cost of the asset is 1,10,000. The wording of the question is, company provides 10% depreciation on straight line method on original cost. So this is original cost. Straight line method means every year same amount of depreciation will be charged and tax rate is 50%. So the answer is 5,500. Is it 5,500? Final figure. Positive or negative? Positive. Very good. Now write year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You will write tax shield on interest in bracket step number 3. And then year 10, write one more thing. Salvage value net of tax. Here you can assume that it is subject to taxation. So the answer is 20,000 is your sale value, which is also equal to the profit. Because book value you have made it 0 here. Book value 0. So minus 50%. You will pay 50% tax. So what you are left with? Is it 10,000? 10,000. Now what you do on your own, first you write down this tax shield here, positive number, compute NPV. Compute NPV. Then I will talk to you. Is it right? Is the answer over? What is the answer? Everybody is done. Take total of the last column. Yes. Answer here. Louder. 6 minus 6740. It seems you are not right. People are not happy with you. Are you? 6 and 401. 6 and 401. People are happy with you. You? Are you close to this number? No query. Can we lock it? Around 67,400. Let us close it. And then write down option 2. What is option 2? Acquire the machine on lease. Acquire the machine on lease. Please don't talk. At least you should be able to do the calculations, totaling, etc. Acquire the machine on lease. Now here I will directly write one table: year, particulars, cash flow, discounting factor at the rate of 7.5%, present value. Okay. And year 1-10 write down. Particular column will be lease rental net of tax. Lease rental is how much? 15,000, and you'll get 50% tax shield on that. So effectively you will be paying 7,500 only. Annuity factor you must have written in the previous answer. How much you had written? 1-10? 6.8641 multiply. Louder. 51481 negative 51481. Compare the two answers. The answer is obvious. Lease is very lower as compared to the loan option. So write decision. The company should acquire the machine on lease. The company should acquire the machine on lease because the present value of cash outflow is lower. Because the present value of cash outflow is lower. Then write down one assumption. Assumption write down. It is assumed that the salvage value will be subject to tax. It is assumed that the salvage value will be subject to taxation. It is assumed that salvage value will be subject to taxation. Okay. Any query now? For 20 marks. But now it is only 8 marks. And you took around 26 minutes to solve. That is not right. You have to increase. Okay. One easy question today. Question number 007. AS Limited is a hire purchase and leasing company who have been approached by a local small scale business interested in acquisition of a machine through leasing. So this time the question is from lessor's point of view. A customer wants to acquire a machine on acquire a machine on lease. He has approached the lessor. The price quoted by the manufacturer of the machine is rupees 3 lakh. 10% sales tax extra. 10% right GST extra. Okay. 10% GST extra. Just add G also before that. The proposed lessee desires to have a primary lease period of 5 years. AS target rate of return on the transaction is 8% post-tax on the outlay. Underline 8% post-tax. So in this problem, we will also take into account all tax implication for the lessor. For example, 1. He has to pay tax on lease rental income. Second, he will get tax shield on depreciation. So after considering tax implication, his return should be 8%. His IRR should be 8%. They wish to fix annual lease rental which are to be payable in arrears at the end of each year. Which are to be payable in arrear means at the end of the year. So lease rental will arise at the end of the year. Their effective income tax rate is 50%. The income tax rate of depreciation on the machine is 25% WDV. Calculate the annual lease rent to be charged by AS Limited. Calculate the annual lease rent to be charged by AS Limited. Now we have solved, if you remember, question number 15 and 16. Is it right? It is like those two questions only, but here we have taxation also. So we'll also need to find out the tax implication. The present value of future cash inflow. The present value of future cash flow should be equal to the cost of the asset. Am I right? If that is equalized, it means he has earned IRR of 8%. So step 1, cost of machine. This is your initial investment. You are a lessor. On behalf of lessee, you will buy an asset. So initial investment will be, point number A, basic purchase price. Basic purchase price 3 lakh. And B, write down, add sales tax at the rate of how much, 10 or 30? 10%, okay. 10%, how much is that? 30,000. So what is your total cost? It is like a capital budgeting exercise for the lessor. He has to invest 3,30,000. And this should be recovered from the future lease rental, tax shield on depreciation and salvage value. Okay. So step number 2, write down tax shield on depreciation. tax shield on depreciation. What is the method of depreciation? WDV. So in such problems, I will draw 4 columns. First column, year. Second column, opening WDV. Third column, depreciation at the rate of 25% and tax shield at the rate of 50%. Tax shield at the rate of 50%. Tax shield at the rate of 50%. Okay. So year 1, 2, 3, 4, 5. Year 1, 2, 3, 4, 5 you will write. What is the opening WDV? This figure 3,30,000 into 25%, 82,500. On this you'll get 50% tax shield, 41,250. On depreciation, 50% tax shield. Next year 2, what is opening WDV? 2,47,500 into 25%, 61,875. Very good. Into 50%, round off the last digit. 30,938. 30,938. Next year opening balance. Louder. I can't hear you also. 185. Others will check. Is right. Into 25%. 46406. Then 23203. Okay, next. Louder. Fourth year opening balance. 139,219 into 25%. 24805. 12403. 12403. Next year opening WDV. 34. Okay. So this will be 17403. Next year opening balance 1,04,414 into 25%. 26,104. 13052. This number I will require in the next step now. In the next step, I will compute present value of future cash flow. Okay. And that should be equated with 3,30,000. So step number 3. Step number 3. Calculation of present value of future cash flows. Just write one note first. Let pre-tax lease rental be X. Let pre-tax lease rental be X. Now draw this table as usual. Year, particulars, cash flows, discounting factor at the rate of 8%, present value. Written. For first 5 years, 1-5, what are the cash flows? Lease rental. You have to visualize. You are a lessor. What will you get? You will get lease rental. And it is given at the end of the year. So 1-5. You have assumed lease rental to be X. x minus, what is the tax rate? 50%. You will earn income, you will pay tax 50% of x. So what you are left with? 0.5x. Then year 1, 2, 3, 4, 5. You will write tax shield on depreciation. In bracket step 2. Tax shield on depreciation. So cash flow, you have to tell me how much was that first year? 41,250. Second year 30,938. Third year, Haji 2,3. Okay, fourth year 1,740. Last year 13052. Stop, wait. What about salvage value? What about salvage value? The problem is silent about salvage value. So what we'll do? We'll ignore. We will, on our own I will not write. The other option is you can assume on the screen the salvage value is equal to book value. That is 1,04,414 minus 26,104. Third option is to assume salvage value is 0. Okay. If you assume salvage value is 0, then there is a capital loss. There is a capital loss because there is a book value. There is a book value. And you are selling it at 0 rupees. The entire difference is the capital loss on which you will get the tax shield. So what we will do? Ignore it altogether, sell it for book value, or take tax shield on loss. 3 answers are possible. Institute should draft problems carefully about salvage value. Okay, we'll ignore it. Nothing. So just write down. In the institute's RTP also, they have ignored the final calculation of salvage value. We'll write a note. Otherwise, you can assume salvage value is equal to book value, salvage value is 0, or ignore. Ignore means the block of asset will continue, so no implication, and salvage value is 0. So dear student, tell me 1-5 discounting factor at 8%. 3.9927. 3.9927. Then year 1 factor. Year 1 factor, louder. 9259. Will you charge me something for answering? You have become too professional, you are not answering. Bolo sir 20 rupees do, then I will give you the discounting factor. Year 2, louder. 3585. Okay, third year 7938, then 7350, then 6806. Okay. Now take calculator, multiply 0.5 into 3.9927. 1.9964x. Next number 38193. Next number 26520. Okay. Next. Okay. Okay. 888. Too late. Let others check. Identify any mistake. Is it right? Now what you do, how do you write the total? First you write 1.9964x and then plus these numbers. How much is the total of this 5 number? 108, 104. 104807. Okay, approximately. If this last one or two digits are different, don't worry. Then it is okay. Now write down, in order to earn 8% rate of return, PV of cash inflow should be equal to PV of cash outflow. PV of cash inflow should be equal to PV of cash outflow. This you will write in next 2-3 more questions, okay? After writing this, you will write 1.9964x plus 1,04,807, and that is equal to how much? 3,30,000. 3,30,000. 3,30,000. So therefore, x equal to 112,799. 112,799 rupees. Write down. Write one assumption. It is assumed in the absence of information. Note, write down, note. In the absence of information, salvage value and the related tax implications, salvage value and the related tax implications have been ignored. Alternatively, one may assume, one means you only, one may assume salvage value is equal to book value at the end of 5th year. One may assume salvage value is equal to book value at the end of 5th year. Next line, one may also assume salvage value is nil and calculate tax shield on loss on sale. Sale value is 0, whatever is the book value is your loss. And also calculate tax shield on loss. So then you'll have some figure here in this calculation. Okay, now question number 8. A request has been received by AS Finance Limited, who are engaged in leasing business, for structuring a lease of a machine costing rupees 30 lakh. So what is my initial investment? 30 lakh. The average post-tax, again post-tax underline, post-tax cost of funds to AS Finance is 10%. In bracket, tax rate is 50%. But they wish to mark up this by 2% to cover the effect of inflation. So what is the discount rate to be used for evaluation? %10 is cost of capital and 2% inflation premium. So 12%. Some students take 10 plus 2% of 10. So how much is that? 10.2. Okay. The 10 and 10.2 will not make any major difference. 2% additional over and above 10. Both are in 10%, 2%, 12%. So this is one new adjustment, 2% additional return you want for covering the effect of inflation. And calculate the annual lease rental to be charged. Assuming the lease period is 5 years, rent will be payable on the first day of each year. So rents will be payable in advance. Tax payment will be made at the end of the year. We'll assume that. Machine will be fully depreciated in 5 years. What is the method of depreciation? Where it is written SLM. In WDV method also we can fully depreciate. Yes, by finding a rate of depreciation in such a manner that after 5 years the balance will become 0 rupees. Yes or no? So what method we will assume? Straight line method. Although WDV is possible if you know the formula to find out the WDV rate. Is it right? So why unnecessary complicate matters? Next line. So first write down step 1, discount rate to be used for evaluation. Discount rate to be used for evaluation. 10 plus 2. %12. Then write down step 2, calculation of annual lease rental to be charged. This is your question. It is like previous problem, but the lease rentals are payable in advance. Second method of depreciation is straight line method. Let pre-tax lease rental be X. Let pre-tax lease rental be X. Now below that you write down, continue below that, calculation of PV of cash flows. Calculation of present value of cash flows. Calculation of present value of cash flows. Under that you write year, particulars, cash flows, discounting factor at the rate of how much? We have written in working note 1, not 12. Discounted cash flow or present value. So you have to visualize what will be the cash flow. 0 to 4. Why 0 to 4? At the beginning of there 0, 1, 2, 3, 4. So total 5 payments. 0, 1, 2, 3, 4. So you write lease rental. And you have assumed it to be X. 1-5. What is 1-5? Tax shield on tax payment, not shield. You are a lessor. So you will pay tax payment on lease rental. Tax payment on lease rental, what is tax rate? 50% into X. 0.5X in bracket. Outflow. Tax payment is an outflow. One more line, right? What is that? Tax shield on depreciation 1, 2, 3, 4, 5 or 1-5. Straight line method, you follow this. This is straight line method problem. So tax shield on depreciation. In WDV write separately. Tax shield on depreciation. What is the cost of the asset? 30 lakh. Is there any scrap value? No. Life 5 years. This will give you depreciation per annum into tax rate. Into tax rate. Depreciation into tax rate is tax shield. 3 lakh. Positive or negative? Positive. So what you do, first you write down factors 0 to 4. On your calculator 1-4 you compute plus 1. Answer 4.0373. Now 1-5 3.6047. Repeat 3.6047. So multiply, first one I will do 4.0373x. Second one you will do 1.8024x, approximately, right? Next one 11 lakh. How much? Or 10 lakh? 10 lakh something? 1081 410 approximately, no problem. Take this total. First you take the net effect of these two numbers. One is positive, one is negative. How much? 2 point. Bolo na. 2.2349x and plus 1 lakh 10 lakh 81,410. Then you write one note which I have dictated in the previous question. In order to earn 12% rate of return, PV of cash inflow is equal to PV of cash outflow. Then after writing that note, you will write this equation. In order to earn 12% rate of return, PV of cash inflow should be equal to PV of cash outflow. That is equal to, what was the initial investment? 30 lakh. If this equation is satisfied, it means you have earned a rate of return equal to 12%. You are using 12% as a discounting factor. Your IRR is 12%. So solve this equation. X equal to, louder, 8,58,468 rupees. Note write down. What is the note you will write? It is assumed that tax payment on lease rental will arise at the end of the year. It is assumed that tax payment on lease rental will arise at the end of the year. Tax payment on lease rental will arise at the end of the year. Over. Now tell me any query. Second, write down one more note. Method of depreciation is assumed to be SLM. Method of depreciation is assumed to be straight line method. Method of depreciation is assumed to be straight line method. Question number 9 now. One more practice. Question number 9. Okay. Again from your RTB. AS Leasing Limited is in the process of making out a proposal to lease a certain equipment to a user manufacturer. The cost of the equipment is expected to be rupees 10 lakh, and the primary period of lease will be 10 years. So you have to recover your entire investment in 10 years. That is primary period. AS Leasing Limited is able to give you the following additional information. The machine can be depreciated fully over the 10 years, but this time they have also written on straight line basis. Assume this is acceptable for IT purpose also. What is IT? Information technology? ITSM? Or income tax? Income tax. The current effective tax rate for AS Leasing Limited is 40%, and they expect to go down to 30% from the beginning of the 6th year of the lease. So this is a unique problem. In one sense, there are two tax rates. There are two tax rates. From year 1 to 5, this period, tax rate will be 40%. So you will get tax shield on depreciation at 40%, tax payment on lease rental at 40%. And then from 6 to 10, for this period, the tax rate will be 30%. Okay. This can happen only in the C exam only, that you will be able to estimate tax rate 5 years in advance. Okay. But since they have given, you have to solve. I just can't believe how do they arrive at such numbers. It is the normal objective of AS Leasing to make a 10% post-tax return on its lease pricing. So what is the post-tax return? 10%. Lease management fees of 1% of the value of the asset is usually collected from the lessee upon signing of the contract to cover the overhead costs relating to processing of the proposal. Underline. This sentence was not there in any of the earlier problem. So how much is lease management fees? 1% of cost of the asset. That is 1% of 10 lakh. How much is that? 10,000 rupees. To cover the overhead cost, relating to processing of the proposal. So overhead cost will be also 10,000. So what is my net cash inflow? 0. So what is the use of this line? No use. Full sentence you have to read. Lease management fees is recovered from the customer to recover the overhead cost relating to processing of the proposal. So overhead cost in this example is relevant because the customer comes, you have to spend time with him, then you have to check his file, document, do some research on this customer, appoint agencies to find out the genuineness of the proposal. All this costs you 10,000. Net cash inflow is 0. So what I'll do, I will ignore this line in my answer by writing a note. Net cash inflow is 0, hence this transaction is ignored. Or if you want to write, you can write the effect is 0. So what you want to do, write or note? Note. Okay, I knew. Annual lease rentals are collected at the beginning of the year. So lease rental will be collected from 0 to 9. Tax payment will be made from 1 to 10. But in tax payment also will break into two parts. 1 to 5, 40%. 6 to 10, 30%. What is the question? You are required to determine the equated annual rent to be charged for the proposal. So write down calculation of pre-tax lease rental. Calculation of pre-tax lease rental. Calculation of pre-tax lease rental. Let pre-tax lease rental be X. Do we need to prepare any working note? No, I'll write directly in the main page only. So first step 1, calculation of present value of future cash flows. Calculation of present value of future cash flows. First column write year, particulars, cash flow, discounting factor at the rate of 10%, and last column present value. Zero to 9. As per the note given in point E, lease rentals are collected at the beginning of the year. So lease rentals, we have assumed X. Then 1 to 5, tax payment on lease rental. Tax payment on lease rental. First 5 year, what is the tax rate? 40% of X, 0.4 X. Is it right? Then 6 to 10, again write the same line, tax payment on lease rental. Tax payment on lease rental, 30% into X. How much? 0.3x in bracket. It is a payment, right in bracket. Visualize what is happening. Now what is next benefit of being a lessor? Tax shield on depreciation. That also divide into 2 lines. 1 to 5. Tax shield on depreciation. Tax shield on depreciation. What is the cost of the asset? 10 lakh. Life of the asset? 10 years. So annual depreciation will be 1 lakh. First 5 year you will get 40% tax shield. Is it right? So how much is that? 40% of 1 lakh? 40 lakh? No. 40. I know. I was just checking whether you are awake or not. Many of you are found to be sleeping. 6 to 10. You didn't react only. Only 3% reacted. Tax shield on depreciation for next 6 to 10. 1 lakh into 30%. How much? 30 lakh? 30,000. Is there any salvage value in this problem? No. So now 0 to 9 you will be able to write the discounting factor. First calculate on your calculator 1-9, add 1. Yes. 6.75 9 0. Now 1-5. 3.7908. This I remember. Next 6 to 10. 2.3538. Now don't calculate again. 3.7908. 2.3538. 2.3538. Is it right? Yes, you. First bench. Corner seat. You're not checking. You have to learn, you have to pass the exam. We are not here for entertainment only. $6.7590x. Multiply now. Next 0.4x into 3.7908. 1.56 51632x. Oh, very good. Others will check. Next. Multiply 0.70614x. Now again multiply 1,51,632. Yes or no? 70614. Is it right approximately? Yes. Now first to add these first three numbers. One is positive, these two are negatives. हाँ जी बोलो. 4.5365x, 4.5365x, and plus, now you add these two numbers. 2,22,246. Was it difficult? Read the problem, read the solution till now. Is it right? Are we on the same direction? Then write down below this one note. In order to earn 10% rate of return, present value of cash inflow is equal to present value of cash outflow. In order to earn 10% return, PV of cash inflow is equal to PV of cash outflow. Now, write yourself one equation, 4.5365x plus 2,22,246. And how much was your investment in this asset? Is it 10 lakh? 10 lakh. Therefore, x equal to 1 lakh 71,442. 444. Write 444. Now write one note. It is assumed that tax payment on lease rental will arise at the end of the year. Tax payment on lease rental will arise at the end of the year. Second note, write down. Second note, as the lease management fees recovered from the customer is equal to lease management fees recovered from customer is equal to the overhead cost relating to processing of the proposal. Comma, the net cash flow is zero. The net cash flow is zero. Hence ignored in calculations. The net cash flow is zero, comma, hence ignored in calculations. Now we'll take one simple exam question. Question number 14. Eight marks. And they repeat it also. Sometimes for 6 marks, sometimes for 5. So 5 to 8 marks in the exam now. Fair Finance, a leasing company, has been approached by a prospective customer intending to acquire a machine whose cash down price is rupees 3 crore. The customer, in order to leverage his tax position, has requested a quote for a 3-year lease with rentals payable at the end of each year. Rentals payable at the end of each year, but in a diminishing manner, such that they are in the ratio of 3:2:1. So 3x, 2x, x. 1x, x. 1x is also okay. So this is called step down lease rental. This is called step down. Yesterday you solved question number 15 and 16. Same problem. Depreciation can be assumed to be on straight line basis and fair finance tax rate is 35%. Only difference between 15 and 16 number now is you have to also consider taxation effect. So on lease rental you will pay tax, on depreciation you will get tax shield. Like previous 3 problems, the target rate of return is 10%. Calculate the lease rental to be quoted for the lease for 3 years. So for all 3 years you have to find out the lease rental. Okay. So let lease rental be 3x, 2x and x respectively for year 1, year 2 and year 3. Lease rental be lease rental be 3x pre-tax write-down, pre-tax lease rental be 3x, 2x and x for year 1, year 2 and year 3 respectively. If you write in detail, then the institute will give you full marks. Okay. Now write down calculation of present value of future cash flows. Calculation of present value of future cash flows. Here, particulars cash flows discounting factor at the rate of 10% present value. Lease rentals are at the beginning or at the end, which means the timing of lease rental and tax payment are same. So I can write like this: year 1 lease rental net of tax. Year 1 lease rental net of tax. How much is the first year lease rental? 3x minus, somewhere below tax rate is given 35%. (1.95x). Year 2 lease rental net of tax 2x minus 35%. Point 1.3x. 1.3x. Year 3 lease rental net of tax x minus 35%. 0.65x now. Now write down 1-3 tax shield on depreciation. Tax shield on depreciation. What is the cost of the asset? 3 crore. So how many zeros are there? 7 or 8. Divide by 3 years. That is 1 crore. And tax rate is how much? 35%. So finally, what is the answer? 35 lakh? 35 lakh. Just check, is there any salvage value you will enjoy? No. So now the problem is like previous 3 problems only. Discounting factor for year 1, 0.9091, 0.8264, 0.7513, 2.4868 approximately, 2.4868. Rat low factor. Next. Multiply 1.95x into 0.9091. Is how much? 1.7727x. Next one. 1.0743x. Next. 0.4883x is right. And the last one 870398.2. First take total of these 3 numbers. How much? 3.3354x. Okay, don't sit. Go ahead, solve. Write one note. In order to earn 10% rate of return, PV of cash inflow should be equal to PV of cash outflow. After writing that note, write 3.3354x plus 8703,982 is equal to 3 crore is equal to 3 crore. Yes, so first tell me x equal to how much? 63848 6384847. Is it right? Just check approximately 6384847 is right? Right? No, the answer is not over. Summary. All 3 years you have to write. Year, lease rental. Year 1, 2, 3. Now year 1, 3x. So take this number on your calculator, memory plus, transfer it to memory plus, memory recall, multiply by 3. How much is that? 1 crore 81 lakh 91 lakh 1 crore 91 lakh, then 54,540, then 2 multiply by 2, memory recall into 2, 1 crore, 20, 27 lakh, continue, 69,000, 600, last 3 digit, 694, right, okay, very good, 63, 84, 847. This question does not require any assumption. Is the answer right? 8 marks only for writing this much, half page. Since you are intelligent student, now I will give you one class work. Question number 10. 20 mark question. Nowadays they ask only for 8 marks. So question number 10. Elite Builders, a leading construction company, have been approached by a foreign embassy. Why? To build for them a block of 6 flats, underline 6 word. So there is a number there, 6, which you have to either multiply or divide at certain places, to be used as guest houses. As per the terms of the contract, the foreign embassy would provide Elite Builders the plans and the land costing rupees 25 lakh. Who will provide this? The embassy. Have you heard embassy in your lifetime? Embassy will incur land cost. What is embassy? Embassy. Huh? Louder. Representative of a foreign country, okay, who stay in a different country, and they generally issue visa, passport, okay, and talk to the government people and enjoy a lot of facilities for no reason. Now, so that is embassy. So cost of land 25 lakh is provided by embassy. So from builder's point of view, this is a cost they have not incurred. Irrelevant. Even though it's a big amount from your question point of view, but if you have not incurred it, why you will consider it? So 25 lakh is irrelevant. It was not incurred by the builder. The elite builders would build the flats at their own cost and lease them out to foreign embassy for 15 years. It's a 15-year problem, at the end of which the flats will be transferred to the foreign embassy for a nominal value of rupees 8 lakh. So is it 8 lakh per flat or 8 lakhs for 6 flats? 6 flats. It's written flats will be transferred, all 6 flats, at a nominal value. Is it right? So 8 lakh is the value of 6 flats. Allied builders estimate the cost of construction as follows. So this is your investment in this flat. You have to incur, area per flat is 1000 square feet, construction cost is 400 per square foot, and registration and other cost is 2.5% of cost of construction. So that will give you total investment required. So what is the total cost of construction and registration? Four lakh? for one flat. For 6 flats into 6. 24 lakh? Yes. So construction cost is 1000 into 400 into 6 flats. Is it 24 lakh? Wait. And registration and other cost at the rate of 2.5%, 60. So if you solve from 6 flats point of view, your total cost will be 24 lakh. So I have to recover this money. This is my investment. So this money has to be recovered from future cash flows. Okay. So the summary of this entire discussion is your investment is 24 lakh 60,000. Salvage value after 15 year 8 lakh. Allied builders would also incur 4 lakh rupees each in year 14 and 15 towards repair. So 14 and 15 you have two more outflows. Repair cost. Repair is a revenue expenditure. Normal repair is a revenue expenditure. So you will get tax shield on that. You will get tax shield on repair expenditure. So while solving, don't take 4 lakh. Take 4 lakh minus tax shield. Okay. Allied builders proposes to charge the lease rental as follows. In this problem, it is a stepped up lease rental. Why stepped up? 1 to 5, normal. 6 to 10, 120% of normal. 11 to 15, 150% of normal. So after every 5 years, they are increasing the rent. Allied builders' present tax rate averages at 35%. Underline the full cost, full word underline, the full cost of construction and registration will be written off over 15 years. Straight line method, and will be allowed for tax purpose. Or should we make it WDV? For 15 years you have to compute tax shield, okay? No. Okay. You are required to calculate the normal lease rental per annum per flat. This is your question. That means during the first 5 years, what is the rent per annum? Per flat. Per annum, per flat during the first 5 years. Okay. Assume desired rate of return is 10%. Salvage value is not subject to tax. Good. Rental and repair will arise on the last day of the year, not at the beginning. Construction, registration and other costs will be incurred in the year 0. At the time 0. Marks? 20 marks. But that was long back. Now they ask the same question for 8 to 10 marks. Solve. Find out the lease rental per annum per flat. That is, find the value of X. You can solve by assuming 6 flats, then all figures should be for 6 flats. Okay. Or you can solve by just assuming 1 flat, single flat, then all figures in your answer should be based on 1 flat only. For example, salvage value, you will write 8 lakh divided by 6. If you are using 1 flat as a base for calculation. Repair cost, you will take 4 lakh divided by 6. Is it right? So I give you the choice. Step 1, I will help you in one step. Calculation of total cost of construction and registration. Right hand side rupees. Point number A. Construction cost 24 lakh. Registration and other cost at the rate of 2.5%. 60,000. Total investment 24 lakh 60,000. So total investment, right, 24 lakh 60,000. Okay. Now your turn. Let the world know that you are an intelligent person. Okay. You have to find lease rental per annum per flat in the first year, first 5 years. You'll be given 5 minutes to solve. Time over. Done? Yes, madam. Kindly express your views. 5,000? Oh, you're quite close. 55141. Just give me the final answer. No explanation required. 5514. Bus. 5514 only. 5514. Normal, I understand. Don't you think it's very low? Anyway, your answer is not right. Anybody else who wants to answer? 57136. Okay, that's better. Anybody else who wants to answer? Whole world is watching you. I am on live mode right now. Jaldi. 33 509. Okay. Yes, you. 242723. 242723. Only this answer I think is right or close to the right answer. Now I will solve. Pay attention. Okay, don't worry. At least you tried. At least you know why C exams are so popular. Now you know why C exams are so popular. We see the result in the class only. Open book exam was there. Even group discussion was allowed. Step 2. Calculation of normal lease rental per annum per flat. This is my question. Let normal lease rental per annum per flat be X. Calculation of present value of future cash flows. Okay, you have to visualize the future cash flows. Year, particulars, cash flow, discounting factor, discounted cash flow. So we will solve taking 6 flats as base. You can take 1 flat as a base. Your answer will be different every time by 1/6. Okay, my answer and your answer, you have to divide by 6. So first you write year 1 to 5. Lease rental, LR lease rental, net of tax. How many flats we have? 6x. 6 into x, 6x, because here you've written per annum per flat, bx. And you take minus 35%. Minus 35% tax payment on that. 3.9x. Is it 3.9x? Be active, yes or no? 6 to 10 write down. Lease rental net of tax. So now 6x into 120% and minus 35%. First, this rent will increase by 120%. Rent will be 120% of normal. So what is the final answer? 4.68x. 4.68x. Very good. 11 to 15. Same note. Try again. Lease rental net of tax 6x into 150% means 9x minus 35% tax payment 5.85x. Very good. 1-15. Have you written 1-15 in your answer? What is that? Tax shield on depreciation. Tax shield on depreciation. Tax shield on depreciation. What is the total investment? 24 lakh. The problem says full cost will be written off. Full what you underlined. Divide by 15 years. Have you minus deducted 8 lakh also? Yes. Then what is the point of telling you underline full cost? You will do only what you want to do. Let the world go to hell. Yes or no? Yes. Nalayak. When you are solving a question, you have to follow the discipline. When the institute is saying full cost will be written off, then you write off the full cost. How much is that amount finally? 57? 400. One more thing, 14 to 15. Repairs, net of tax. I had instructed you, take 4 lakh minus tax shield. Repair is a revenue expenditure. Is it 2 lakh 60,000? Negative or positive? You are paying repair cost. Okay, one more thing. Year 15, salvage value. You have to visualize what is happening. How much is salvage value of flats? 8 lakh. Those who are taking one flat as a base, 8 lakh divided by 6. 2 lakh 60,000 divided by 6. Okay. Depreciation divided by 6. As you wish. Answer will be same. So now discounting factor for 1-5. Wait, I will tell you. 3.7908. 6 to 10. 2.35. 78. 2.357 is not right. Okay. 2.3538. And 11 to 15. 1.4615. 1-15. 7.6061. That's good. 14 and 15. 5027. Last year. 2394. This much efforts you have to put if you are desirous of passing exam in first attempt. And then you have to multiply, add, equate. And all this you have to do in 5 to 10 minutes. So multiply 3.9 into this number. 14.784x. Continue. Next one. 11.0158x. Okay. Continue. 8.5498x. Okay. Continue. 133. I think some mistake is there. 46 43 65 90. This one 1 lakh negative 1,30,702. This one 191 44 514. No problem. 514. Then total. First add these three numbers which has x in it. Yes, anybody got the answer? Louder, nobody is answering only. 34.3496 x. Okay, and this add this last three number. One of them is negative. Fast. 497 408. Arey, you are not sitting in virtual class. You are sitting in live class. Answer. This is for 6 flats. Now those who have done like this, take this number and write is equal to 24 lakh 60,000. Is it right? Below this table, in order to earn 10% rate of return, PV of cash inflow is equal to PV of cash outflow. Let me try now. 34.3496. 34.3496x plus 497408. 497408. And this should be equated with 24 lakh 60,000 initial investment. Yes, now you answer. 57,217. You? 57,136. Okay, that is okay. This is enough. Either of the two is right. 47,000 you have to reach. Around this range you are getting the answer. So who got it right before I started solving? Not now. 10 minutes before. 6 students. That's not bad. More than national average. Now, question number 11. In the previous question, write a note. The cost of land, rupees 25 lakh, is not considered. The cost of land, rupees 25 lakhs, is not considered because it was not incurred by the builder. It was not incurred by the builder. So one number we have ignored in our answer. For that I have written a note. Any query now on this question number 10? One more question which they ask quite often is 11 number. An industrial unit desires to acquire a diesel generating set costing rupees 20 lakh, which has an economic life of 10 years, at the end of which the asset is not expected to have any residual value. Cost 20 lakhs, scrap 0. The unit has two choices. What are the two choices you have? One is to take the machinery on lease. Second is to purchase the asset by outrightly raising a loan. So again we are back to problem from lessee's point of view. Then lease payments are to be made in advance. So here you have to be careful. Lease rental will be paid in advance. But they have not mentioned about the loan. Whether the loan installment will be paid in advance or at the end of the year. So we'll assume installment will be paid at the end of the year. But there are some questions asked in the exam where the installment is also paid in advance only. So accordingly we'll solve, no problem. Lease payments are to be made in advance and the lessor requires the asset to be underline lessor requires the asset to be completely amortized over its useful period. So lessor would depreciate the asset over 10 years and the asset should yield him a post-tax return of 10%. Asset should yield him a post-tax return of 10%. So first you will have to find out the lease rental the lessor would charge after taking into account tax implication. This time you will not directly write 20 lakh divided by annuity factor and you got the lease rental. You have to also take into account the tax implications. He wants to take 10% post-tax return and he wants to write off the asset over 10 year on a straight line basis. So here we are mixing the two problems. Yes or no? First we'll have to find out how much lease rental the lessor would charge based on last 5 questions that you solved today. And using that lease rental, go to the lessee and then from his point of view you evaluate the lease versus loan option. This is ICI. The cost of the debt is 16% per annum. If you borrow, the loan is available at 16%. And the asset, the average tax rate is 35%. For whom? Lessee or lessor? Nothing is given. Assume tax rate is applicable to both parties. Same. It is expected that operative cost would remain the same under either method. Useless line. Because if the cost is going to remain same in both the option, will not write in the answer. Straight line method of depreciation may be adopted. Very good, right? Very good. And then to help you, they have given you present value factor. You'll find 3 columns are there. 10% for the lease rental that lessor would like to charge. 16% for interest on bank loan. Then Y in the center 10.4% is given. Lessee would use 10.4% discount rate. Why 10.4? 16 minus 35%. Just try 16 minus 35%, 10.4%. So that is for the purpose of discounting factor. Lessee would use. As a financial consultant, indicate what your advice will be. So whether the lessee should go for lease option or the purchase option. Is it right? But first thing you have to find out how much will be the lease rental the lessor would charge, which will give him a post-tax return of 10%. Once you get that lease rental figure, then we'll solve it like a normal question, okay? So some more time will be required. Write down quickly. Calculation of lease rental to be charged by lessor. Calculation of lease rental to be charged by the lessor. Let pre-tax lease rental be X. Let pre-tax lease rental be X. Calculation of present value of future cash flows. Calculation of present value, future cash flows. 5 columns. First you solve it as if you are solving a problem from lessor, how much lease rental he should charge, which will give you 10% post-tax return. Year, particulars, cash flow, discounting factor at the rate of 10%. He wants 10%. Present value. Okay. Year, how many years are there? Are lease rental at the beginning or at the end? End, who said that? Lease rentals are to be made in advance. Lease rentals are to be made in advance means beginning or end? Beginning, 0 to 9. It's a 10-year problem. I don't know why they give 10-year problem. In the Chakkar Institute, students' life extends by few years. Simply they should test by giving 2 years, 3 years. That knowledge is enough, na? Remaining work becomes a laborious work only. Anyway, that depends on demand and supply. Now, lease rental. Lease rental. How much is lease rental? We have assumed X. 1 dash 10. What is 1 dash 10? Tax payment. We have maintained consistency in all our answer. If lease rentals are in advance, tax payment at the end. Tax payment on lease rental. What is the tax rate? 35% of X. 0.35X. And then for 1 to 10, you will also get tax shield on depreciation, which is, what is the cost of the asset? 20 lakh divided by 10 years. No scrap value. It's written in the problem, no scrap value. Second line of the question, no scrap value. And how much is the tax rate? 35%. Final answer 70,000. Positive. And the problem says no scrap value. Okay. Now how will you take 0 to 9 factor? Go to question book 10% column 9th year. Can you see 5.76 is written there? Add 1. It will become 6.76. 9 is given. Add 1. And for 10, 6.14 is given. Can you see that? 6.14. Last line, 10% column. So if it is given, use it. Don't waste your time. In any case, you don't have much time for SFM paper. So 6.76x. Multiply this number 0.35x into 6.14. 2.14, 9x bracket. 70,000 into 6.14. 4 lakh. 29,800. First you add these two numbers. 4.61 1x and plus 4 lakh 29,800. Is it right? Now write down below 4.611x 4,29,800 should be equal to how much amount he has to invest in this asset? 20 lakh. 20 lakh. So after all exercise, your X is equal to 3,40,000. 340534. This is the lease rental he will charge, means lessee will have to pay. So lessor would say, I want 3,40,534. Now you are a lessee. So you have to evaluate whether you should go for lease option or loan option. If you pay lease, this is the rent you have to pay in advance. Now write down evaluation of lease versus loan option. From this point, your actual answer starts. Evaluation of lease versus loan option. Option 1. Acquire the asset on lease. Acquire the asset on lease. Discount rate is not given. So first I need to find out discount rate to be used. Discount rate to be used by the industrial unit. By the industrial unit. An industrial unit desires to acquire a diesel generating set is equal to after tax cost of borrowing. Probably that is the reason they have given you the 10.4% column also, which is I into 1 minus T, which is equal to 16 into 1 minus 0.35 That comes to 10.4%. Sometime you can get some hint from the question. Okay. Now for both lease and loan, we'll use 10.4% discount rate. Step number 2. Calculation of present value of cash flows under lease option. Draw this table again. Here, particulars, cash flows, discounting factor at the rate of 10.4% present value. Zero to 9, lease rental. How much was that? 340534. 1-10 tax shield on lease rental. How much was that? 35% of 340. This you write in bracket. 35% of 340534. Huh. 1,19,187. Don't calculate factor. Go to the book. 10.4% column 9 year. 5.66 is there. Plus 1. 6.66. And 10.4 last line. Is it 6.04? 6.04. Use the factor. It will save time, na? Every second counts. $3,40,534 into 6.66 in bracket. How much is that? 20 lakh? 22? 67,956. Wait. Others. Right? Once again. 119,187 into 6.04. 7 lakh 19,889. So tell me the total under this option. One is negative, one is positive. 15 lakh 48,000 06 7 negative. Any query now? See how they have mixed the two problems. First we learned evaluation from lessee's point of view. Then we learned how to compute the lease rental. And in this problem they have mixed the two. Answer is not over. Option 2. What is option 2? Purchase the asset by borrowing. This question also has come in one recent RTP. It was asked in the exam also. Purchase the asset by borrowing rupees 20 lakh. Now this question has not given how this 20 lakh will be repaid. Whether principal will be paid in equal installment or it will be paid in equated installment, principal plus interest are equal. What we will do? If nothing is given, we'll assume equated installment. So for that you have to first write down step 1. Calculation of loan installment. Problem is silent. If you read the problem carefully, In all previous problem, the mode of repayment of loan was specified. You can read any problem before this. But in this problem, they have not mentioned. They only mentioned company will borrow 20 lakh, interest rate is 16% per annum. This is the only information given. So loan installment is equal to loan amount divided by PV annuity factor. How much bank wants? 16%, comma. How many years? 10. So probably they have given you the annuity factor for 16% so that one day you can use air. 4.83, the last line. Many factors are not to be used in your answer. Unnecessary they have given to confuse you. So how much is this? 4 lakh? 14,000? 0? 7? 9, round off. Then discount rate I have already calculated. This includes interest also. On interest you'll get tax shield. One more step 2. This is the very boring step. Calculation of tax shield on interest. Yes or no? But no problem. Who had asked you to fill that form of CPT? You have to do everything. Okay, now. Tax shield on interest. How many years? 10 years. That is why I will only draw the format. And you will solve. Never in my life I have solved this problem in class fully. Year loan outstanding, interest at the rate of 16%, installment payment, and the last column is tax shield on interest at the rate of, be fast, 35%. Tax shield on interest at the rate of 35%. You will do yourself. I will only just start the problem by writing year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and your starting point will be 20 lakh. What is the interest rate? 16%. So how much interest you will be paying? 3,20,000. How much is the installment? 414,079. And on 320 you will get 35% tax shield. How much? 1,12,000. Is this answer right? 1,12,000. Yes. Now you complete the table first. Yes, yes. Be little active. Jago, jago, Mohan, jago. This has come in one of the exams. I am not torturing you unnecessarily. Over. Last column is over. Check the answer now. Can I assume you have done the last column? Is the assumption right? Haju, who will take the responsibility? You. Good. Answer second year. 1,06,731. Third year 1,00620. Fourth year 93,531. Next 8,530. Next 7,5,768. Then 6,4,703. Then 5,868. Then 3,6,978. 21764. Is it 21764? Now you can go to the last part of this answer, step 3. Calculation of present value under loan option. Calculation of present value under loan option. Year, particulars, cash flow, discounting factor at the rate of 10 point, what, 4%, and present value. Year 0, write down cost of the asset. What is the cost of the asset? 20 lakh. Year 0 borrowing, that is also 20 lakh. What else you will write now? 1-10 loan installment. How much is the loan installment? 4,14,079. Outflow. 1-10 taxi loan depreciation. 1-10 taxi loan depreciation. You are the owner. Amount already calculated earlier in lessor's book. No problem. Again do it. 20 lakh divided by 10 years into 35%. 70,000? 70,000? Yes or no? And then a long list. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What is this? Copy your answer from previous working note, those who have done, in bracket step 2, and then write the factor yourself. Now don't copy the factor from the book. Why? They are cumulative factor. Who has copied? Raise hand. At least one. No one. Oh, amazing. You don't have to copy this factor from the book. The reason they are cumulative factors. These are single year factor. So my duty is over. Give me the answer. over. What is the answer finally here? 15 lakh 78,000 600 660 661. Yes. 15 lakh 78,000 460. One person is getting 1578 460. That is okay. First four digits just check 1578. After that, all three digits, whatever you have written, is welcome. 1578 should be the first four digits. Is it there? Compare with the previous answer. That was 1548. काफी करीबी मामला है. Yes or no? But still we have to write a decision. The answers are very close. Really speaking, practically speaking, it is like an indifferent situation. But we are student. For us 30,000 also matter. Is it right? So write down the company should acquire the diesel generating set on lease. The company should acquire diesel generating set on lease because the present value of cash outflow is lower. Because the present value of cash outflow is lower. The company should acquire diesel generating set on lease because the present value of cash outflow is lower. Assumption. One assumption write down. It is assumed that loan will be repaid in equated year-end installments. Loan will be repaid in equated year-end installments. Okay. Loan will be repaid in equated year-end installments. Now we'll continue tomorrow.